Hello traders, Doc here. Welcome to my new video. I'm going to talk about the candlestick patterns, but this time I will show some examples on the charts. In this first example, we can see here huge bullish move. Okay, we have this swing low and we have this swing high. Price formed this candlestick pattern here with these huge wicks up and down. And what that means, like I said in my previous video, it means indecision. But as you can see here, price then went down. So this level here, it's important because price reacted to that level for some reason and it went down. Okay, so next time when price reached this level, this one, what happened? We can see here this beautiful bearish engulfing candlestick pattern. And as a reaction to this level here, price formed this beautiful bearish engulfing, like I said, and it went down. So this is the first example of this bearish engulfing pattern. But then, as you can see, price went up again. I won't go deeper with analysis because this is a video about the candlestick patterns. But as you can see here, price reacted to this low and it went here again and it went up. What happened next? Price reached this zone, this level again, okay, as you can see here. So we have this resistance zone. Price reached this zone again. This is actually resistance zone. And third touch is usually considered as a confirmation. So price reacted to this level again with this beautiful bearish engulfing candlestick pattern. What that means, it's an indication that price will go down. But what happened next? As you can see here, we have this huge wick rejection. So price went up at one point, but bears stepped in again and they pushed the price again and formed this huge bearish wick rejection. And price formed massive bearish move. See this very strong bearish candlesticks. That means this time we combined resistance zone, we combined bearish engulfing candlestick pattern and this huge wick rejection. So that is very important to understand that you need to combine the other tools. This is a beautiful example of resistance, candlestick pattern, and I can say wick rejection. It is a beautiful indication that price will go down, and as you can see, price did go down. At this example, we have two bearish engulfing candlestick patterns and they worked both times. As you can see, price went down here and price went down here. But this time we had one more reason to enter, actually two more reasons to enter, this resistance zone and this huge wick rejection. On this example, we can see a candlestick pattern called three black crows. These three bearish candles, strong bearish candles, formed one after another, closed below the previous, of course, and they formed this candlestick pattern. What happened next? Price went down. It is indication that bears are in the control and that price will continue to go down. So it provided us with a valid sell signal. But let's go deeper into this example. We can see here a beautiful downtrend. Okay, but eventually pullbacks will occur. In very rare situations, you will see clean downtrend or clean uptrends. Pullbacks, they just have to occur at one point. We can see here two wick rejections. It is an indication that bears are stepping in. Not every time, but you just wait, okay? And what happened next? Again, two wick rejections. So now we have more things to work with. Is this a pullback over? Well, there are some signs and final confirmation that this pullback is over and that price will continue to go down. We found in this candlestick pattern called three black crows. As you can see here, price continued to go down. This time we have example of the candlestick pattern called morning star. Okay, price went down. What happened? This beautiful morning star occurred. We have here indecision, okay, bulls and bears are fighting. It was a huge fight here, but eventually bulls stepped in and pushed the price up. So we can say that this candlestick pattern provided us with a valid buy signal because morning star usually means that price will continue to go up or reverse. This time it is very important to say that this was a very risky situation. And the reason is because we don't have anything here. No support zones, no key levels, no wick rejections, nothing. So to enter just because of this candlestick pattern, it was a very risky business. This time it worked out. price did go up, but most of the times it will not be just like this, okay? This is just example to show that the candlestick patterns, they can work. But the best thing is to combine them with the other tools. Like in previous examples, you saw resistance level, you saw weak rejection, you saw candlestick pattern, and then you enter, okay? Here we have another very, very interesting formation. We can see here basically two candlestick patterns formed one after another. What is this? This is bearish engulfing pattern. And what is this? If you remember, this is tweezer top. And both patterns provide us with a sell signal. And this time they combined, basically formed one after another, which gave us another reason to believe that price will continue to go down. And as you can see here, it did go down all the way here. We don't have anything here again, okay? No resistance zones, no key levels, no weak rejections, but we do have these two very strong sell signal candlestick patterns formed one after another. So bearish engulfing and tweezer top. And this time the situation is not as risky as in a previous example. Let's see another example with this tweezer top candlestick pattern. It is here, okay? These two candlesticks. That is a tweezer top. This time this tweezer top didn't provide us with a valid sell signal immediately after it was formed, but it showed us that this level here can be resistance, okay? Which is exactly what happened here. And finally here, when it confirmed this zone as a resistance zone, what happened next? Price went down. And I want you to understand that these candlestick patterns, they don't work every time. Even if you have a perfect setup, it will not work every time. Take your loss, use your stop loss, have a normal risk-reward ratio, reasonable risk-reward ratio, and you will be fine on the long run. And what we have here, we have this beautiful downtrend. We have this strong bearish weak rejection. We have this massive bearish candlestick. And finally, we have this beautiful bearish engulfing candlestick pattern. And actually, it retested this previous low level here. So we have downtrend, we have retest, we have beautiful bearish engulfing candlestick pattern. And it is perfectly normal to open a sell trade because we expect price to continue to go down. Okay, but what happened? Price actually reversed and it went up and you lost a trade. So don't blame yourself too much when something like this happens. It will happen eventually. It is very, very important to understand that. You will lose many times, even with a good setup. Don't be sad about it. Just move on and continue with another trade and try to find another good setup. This time I'm going to show you an example of a pattern that we cannot call with any name. Okay, but we want to understand the meaning behind this pattern. We can see here very, very strong bearish candlestick. It was probably a reaction to news or whatever, it doesn't matter, but price failed to break this zone, this level, okay? After a certain period of time, price has reached this level, this zone again, okay? And what we can see here this time, here we can see this weak rejection. So bulls stepped in and kept the price from going down. After that, we can see these two indecision candlesticks. They represent a fight between bulls and bears, and we don't really know what is going to happen, so we just wait, okay? That is the best decision because fight is going on and we need to see who will win it, okay? This beautiful and strong bullish candlestick answered that question. So bulls took the control, they won this fight, they took the control and push the price up. This example is very important as I want you to understand that you don't really have to trade just candlestick patterns with certain names, but I want you to understand the meaning behind any pattern that you see. Now I want to show you a very interesting example and how to combine the different time frames and candlestick patterns. Here we have this bearish trend line. As I said before, the third touch is usually considered as a confirmation. Price reached this trend line again and formed this strong bearish reaction. Okay, and what you can do when you see this? Well, actually you can scale down on the lower time frame and see more reasons to enter a trade. And try to find my entry level on the 15 minutes time frame. Here we are on the 15 minutes time frame, and as you can see here, price confirmed this trend line with this bearish engulfing pattern. Very interesting fact. But what happened next? Next, price went down, failed to break this minor low level, but finally broke it with this beautiful and strong bearish candle. This is very strong indication that price will continue to go down, and this is exactly what happened. So after this candlestick, it was very good opportunity to sell. As you can see, price went all the way down. Just look at this. Massive drop, massive drop. These are some examples that I wanted to show you today, but very important lesson to take from this video is that candlestick patterns, they will not work every time. Don't expect them to work every time. Combine them with the other tools. Even if you fail, again, just move on. Use a reasonable risk-reward ratio, risk reasonable amount of your account size, and just focus on another trade. That's it for today. I hope you enjoyed it. I hope you learned something new. If you did, you can subscribe to this channel, like this video, and see you next time. Bye bye.